Hello everyone, my name is Michael and today I want to talk about hodling. In this video, I will share my view on how to hodl properly. Spoiler alert, hodling is not as easy as it seems. Hodling is important for several reasons. It is a landmark strategy for crypto and it highlights an important principle, dedication to decentralization and the original version of cryptocurrencies, mainly Bitcoin. By hodling onto their investments, holders demonstrate their commitment to the decentralized peer-to-peer. Hold on for this video till the end, for I will explain how hodling can boost your trading. By the way, do confess in the comments if you are hodling. Now, let's get started. For those of you who don't know what hodling is, it's simply put a crypto slang for holding strategy in trading. Why hodl? It's kind of a meme story, actually. The term is a deliberate misspelling of the word hold that originated in the cryptocurrency community. It started as a typo in post on December 18th, 2013 on the Bitcoin Talk forum. A user made a drunken post with the title "I'm hodling" during a period of high market volatility. The post expressed frustration and a determination to hold on to his Bitcoin investment despite the price drops. Such loyalty to Bitcoin didn't go unnoticed and the typo quickly gained popularity and became a meme in the cryptocurrency community. So hodl is now used to describe a strategy of buying and holding cryptocurrencies for the long term without worrying about short-term market fluctuations. The term has also been humorously interpreted as an acronym for hold on for dear life. So what can we make of that? At first glance, it seems that hodling is an easy and not so elaborate strategy. To some extent it is true, however there are tricky parts, but let's start with the basics. The hodling strategy is not a unique phenomenon in the cryptocurrency market. This strategy is widely used by many traders outside the world of crypto. There it is known as buy and hold or simply a hold. Like if you use hodl instead of hold, it is based on the investor's belief in the value of the asset and its profitability in the long term. Why sell an asset if it in time will only increase in value? The best example of that is investments in gold or other conservative assets. I recall one interesting point concerning holding. Well, I came across the statistics that if we remove the past 10 days from the 20 years of S&P 500 market history, and then we will lose almost all the profit, 76% against 284%. This is sometimes used as an argument in favor of holding. The point is not that great. We can mirror that and say that the removal of 10 worst days will give us 814% profit against 284%. And both of the arguments are equally unrealistic. We simply cannot remove bad or good days. We can try to work around them or simply live through the bad and the good times. The first way requires trading skills and a lot of luck. The second, which is, by the way, precisely what the holding strategy is, requires different sets of skills. It takes good analysis, faith, and nerve. Let's go back to the world of cryptocurrencies, where the holding strategy is primarily applied to Bitcoin, one of the most conservative assets. The price history of Bitcoin shows that in the long term it grows. So from an analytical perspective, Bitcoin is okay. And for crypto enthusiasts, it is natural to have trust and faith in Bitcoin, the first cryptocurrency, the flagship of blockchain, His Majesty the digital gold. As for the nerve, here is where things get tricky. As we know, prices in crypto are often a roller coaster with all the thrill attributed to that. And many fail to hodl for reasons mostly physiological. Fear of missing out, price drop, panic, and so on. That is why hodling sometimes becomes a real task for nerves. And despite the hold on for dear life vibe, the best hodlers are those who are driven by quiet confidence that, regardless of circumstances, Bitcoin will increase in value. Therefore, short-term price fluctuations, crypto interest, and so on do not mislead them. So, what should you keep in mind when holding? Perhaps the most important thing is not to succumb to panic. If you're confident that Bitcoin will bring you significant profits in the long term, it is beneficial to develop a reasonable immunity to unfavorable signals. If many people are selling out of anxiety, you should think twice before joining them. Bitcoin has dropped in price many times and has subsequently recovered strongly. If you're a holder, it's important to remember this. Of course, patterns can always be broken, but if your long-term strategy is based on faith in the asset, you shouldn't abandon it lightly. Write in the comments how far are you ready to go while hodling. At which point would you sell? And if you're a trader, is there something to learn from hodlers? Of course. Well, obviously, good hodlers can teach how to be resistant to panic and anxiety, which is generally a good thing in any trade. But besides that, there is much to be learned from observing their behavior, as it can be very indicative. If even they start to sell, it surely says something about the market sentiment in general. But keep in mind that the reason hodlers sell Bitcoin can be twofold. They can do so both out of fear and greed. So they either think that Bitcoin will fall further or it will start falling soon and they want to cash in. In any case, their behavior is useful to track. And one more thing, it is known that diversification is a way to go. So why diversify only a sense when we can also diversify strategies? Among other benefits, it may bring a better understanding of the situation since you're looking at it from two different perspectives, of a trader and of hodler. So guys, thank you for joining this video today. I'm Michael. Stay tuned to this channel. Don't forget to like, push the notification button, subscribe, and share this video. See you next time.